Welcome to the Atlantic Council. I'm Jenna Ben-Yehuda, Executive Vice President of the Atlantic Council, and I'm really delighted to welcome all of you to the GU Economic Center's report launch titled A 3 Billion Person Challenge, an Untapped Global Market for Financial Services. Today's conversation will reframe financial inclusion not as a distant aspiration, but as a truly massive economic opportunity for growth, resilience, and shared prosperity. The world has made real progress over the past decade, and today 3 out of 4 adults in low and middle income economies now have financial accounts, progress that we should absolutely celebrate. But the data tells a complicated story. We know that access alone is not enough, and nearly 3 billion adults do not meaningfully use formal savings, credit, or insurance, limiting the growth and resilience benefits of inclusion. Individuals, families, and entrepreneurs are being left out of the systems that can help them to save, invest, and build businesses and manage risk. And without access to credit, small business owners can't expand, they can't hire or innovate, and households can't smooth consumption or build resilience against shocks. So this is the work that our team has been undertaking over the last year to really understand the scope of the challenge and to develop a clear action plan for policymakers. The report we're launching today builds upon the latest evidence showing that financial inclusion really is more than an indicator. It's truly a catalyst for inclusive growth, economic participation, and long-term well-being. By bringing more people into the formal financial system, we unlock new markets, expand economic activity, and reduce inequality. And technology, particularly digital public infrastructure and artificial intelligence, can offer a pathway to accelerate inclusion. And these innovations can lower costs, tailor products to underserved populations, and build trust. But harnessing these tools responsibly depends on strong governance, data protection, and regulatory frameworks to give users confidence that their money and information are safe. Citizens really have to be confident that their wallets are truly theirs. And in a world of AI, deepfakes, and cyber hacking, trust sits at the center of this conversation. Expanding access must go hand in hand with consumer protection, transparency, and strong governance, particularly as digital financial tools expand rapidly. Financial inclusion also reinforces resilience. When people can access savings, payments, insurance, and credit, they're better able to withstand economic shocks, from public health emergencies to climate impacts, and then they can recover more quickly. No one sector is going to solve this alone. Public and private collaboration will be essential. Governments set the enabling environment, but it's also really financial institutions, fintech innovators, and multilateral partners who must bring innovative solutions at scale. And we know, and the research shows, that this is not going to happen on its own. And so while this is a global challenge, solutions must be tailored locally. Policies that succeed are those that draw on localized insights while integrating global best practices. None of this is going to be easy, and we know it's not going to happen overnight. But as we can see, and as the report shows, there are clear examples of what works and what doesn't. And I'm delighted to be here launching this report today. I think it's really the start of new momentum for our GU Econ Center to really build on its work through its own Bretton Woods 2.0 project on the US G20 presidency, where they've been asked to play a leading role in bringing together think tanks from around the world. But first, let's turn to the new research and our fantastic panel. To introduce our panel and moderate today's conversation, it's my pleasure to turn the floor over to the Chair of International Economics here at the Council and Director of our GU Economic Center, Josh Lipsky. Thank you, Josh.
Thank you so much, Jenna. Thank you for being here this morning, and welcome everyone to the Atlantic Council for those of you in person, and thank you to those of us joining us online. I have the honor of moderating this fantastic panel, so let me introduce our all-star lineup. To my left is Dr. Ruth Goodwin-Groen, the author of the new report today. I'll turn to her in a moment to give us the key findings. She's also a senior fellow with us at the GU Economic Center and brings over 3 decades of leadership in inclusive financial sector development and financial inclusion in emerging markets, the topic of today's conversation. To her left, Dr. Abe Selassie, Director of the Africa Department at the IMF, my former colleague at the IMF. He oversees the fund's operations across 45 countries, leads strategic engagement with senior policymakers throughout sub-Saharan Africa, and is a leader both in the region and globally on these issues. Abe, thank you for being here with us this morning. To his left, Dr. Nicole Golden, also a senior fellow with us at the Geoeconomics Center. We are blessed with fantastic resources here at the Geoeconomics Center. The person who kickstarted this whole body of research for us, wrote the issue brief that launched this report and this project. Nicole brings deep expertise. She is development head at UNU Center for Policy Research and has decades of leadership in finance, development, and inclusive growth, including service at the World Bank. Thank you, Nicole. And to her left, Shivani Roy, CEO and founder of Tala. Shivani Soroya, CEO and founder of Tala. Financial infrastructure and services reach over 13 million people now, Shivani. Latin America, Southeast Asia, and East Africa. Shivani, thank you for everything you and Tala have done as partners on this project over the past year and a half. We are very grateful.
Thank you.
All right, let's jump into it. So, hot off the presses, here is the report. It will look nicer when fully printed because it was just launched this morning, but here's the paper copy. You can also find the QR code online and download it. You should be able to see that if you're watching online, and those of you in the room will see the QR code here, so you can explore the full report. But Ruth, let me turn to you first. Could you give us the key findings?
Thank you, Josh. Great to be here with such an esteemed panel. Great to see friends here, and I know there are friends online as well, so thank you so much. 5 quick points. Good news, a challenge, good news, a challenge, and action. So let's just do 5 quick points. First, good news. As we just heard, and as many of you know, 75% of adults in low and middle income economies have a financial account. But when that was launched this year, and thanks to our colleague Leora and others, we know the depth of this. We know that there are, payments have doubled. 32% 10 years ago, 62% now. That savings have more than doubled in 13 years, from 17 to 40%. So there's great progress. And it's thanks to governments who've digitized payments to citizens, companies, to workers, and to their customers, and so on. But as our colleagues at CGAP said, credit and insurance have been underutilized. And so I thought, let's look at that. And so if you look at the numbers that we can see, if 75% have an account and only 24 are using credit in the formal sector, that means 51% have an account and are not using. So underutilized is an understatement. Is it fair to say? So that means that we have a challenge, because out of the 4.84 billion in the adults in low and middle income economies, that means 2.5 billion have, that's the 51%. And then when you add on to that, there's 1.3 who still don't have accounts, who are moving fast, thanks to the great work on digitization. And the 24%, many of them are unhappy with the credit products that they have. So then you end up with probably more than 3 billion. And that's a big problem. That's a big challenge that we're facing in financial sector. So let's figure out what the good news is, how we can solve that. And come to the rescue, DPI and AI, because the challenges are affordability and appropriateness and trust, as we heard summarized. I know many of you are working on digital public infrastructure, digital payments, digital ID, digital data, and I know that many of you are also working on how to use AI to design better products. Those of us who work with women entrepreneurs know that there's a huge demand there and that there's a real opportunity. And so we know that we're at the frontiers of real opportunity. However, there's a challenge there. We've got to be able to mitigate the risks, as was noted before, that this is, we all know, scams, fraud, financial abuse, and other abuses using the technology have to be prevented so that we can build trust in the financial sector, so that the women entrepreneurs who need to have the finance to grow their businesses can trust that when they're engaging with it. And so we come to the 3 actions, and there are many actions. Those of us who work in this sector know that there's so many things to do. So I just chose 3, thanks to the team. And the first one is on working across all the different supervisory authorities. As a former member inside government, we know how challenging it is to work across the digital economy authorities, the financial regulators, the national security team that are also involved in this, the competition authorities, you name it. And they don't naturally work together, so it takes senior leadership to be able to bring together to address the challenges of the new technologies. And so also what's needed is not just great consumer protection, but enforcement. Someone won a Nobel Prize for saying that. But there's a real opportunity here, or to look at the trade-off. It's costly to enforce, but what's the cost of not doing it? So enforcement of responsible consumer regulation to protect customers so that they are safe in the sector. And finally, of course, the codes of conduct with financial sector. It's great that we've got such an amazing panel to pick up on all of those pieces, but there's huge momentum, for example, on the Women Entrepreneurs Finance Code that is building government, private sector, civil society to work together to address these challenges. So thank you.
Ruth, thank you for doing that in 5 minutes, summarizing what is a year of research. It is not easy to do, as I know. Incredibly well done on this report. We are so thankful to you. We're going to dig into the pieces of it. So, Abe, I'm going to turn to you as the first respondent. One, to react to what Ruth said, outlining the key findings, and also your perspective from the fund. I'm very curious what you're seeing on the ground in the region through your surveillance work. We talk a lot about AI from a Washington perspective of the game changer potential. We also talk about the risk, as Jenna highlighted and as Ruth highlighted, frauds and scams and trust issues and otherwise. But what do you actually see from the fund's perspective, both now and then projecting forward what could be for the region?
Thanks, Josh. Inviting me to be part of this discussion, but also for Ruth, everybody involved for this fantastic report. Really found it very interesting, really important insights, many of which resonate with how we see things have been played out in the region. First point I want to make is that, one thing I loved about the report and the issues that it highlights is it really shows how the importance of technology, the digital transformation, particularly with regard to financial inclusion that has taken place in the region over the years. I think, honestly, of course I'm biased, I'm talking my book, but really difficult to think of a region that has been impacted as much by digital transformation as Sub-Saharan Africa has. Particularly in the area of digital finance, leapfrogging we've seen in action. I remember I was based in the mid-2005-6 in East Africa, in Kampala, and I remember when M-Pesa was just being rolled out in Kenya, and there came a point when, I don't know, about 10 years ago when I was in Nairobi, wanted to make a payment and I couldn't because I didn't have an M-Pesa account. I had to scramble to exchange dollars for shillings to be able to make payments. And this was not quite, it's outside Nairobi. So the penetration of digital finance, technology use at all aspects of life is really just incredible. It has allowed leapfrogging, it has allowed, just much, it has had an impact on social life, political life, way more, including the dissemination of information. So it's transformational. And Africa has been really quick to adapt to this. And it's through that lens that I see all the things that are ongoing right now in terms of the AI space, but also other remaining issues to be addressed that are going to be playing out. Second, I want to say also that, what worries me, or what I think needs to be done in the region, are indeed the points that you highlighted. I think there tends to be a bit of skepticism about technology in general by older people, not so much the public and the young, and there's a lot of innovation that's going on. But certainly at the policymaker level, there is a bit more concern, worry about controlling this technology, which is just creating so much havoc in places, is being abused in areas. And again, the tapestry is very different across countries, but I think if there's one thing that is needed by leaders, it is to see that this is a technology on which Africa is going to prosper. And given that we are going to be the source of much demographic change, much new workforce increase, which I associate with ideas more than just hard labor, it's really important to make sure that we lay out the public infrastructure, the that's needed to play on this. And just one last thing, if there is one thing that gives me cause for concern, and it's a little outside the report's focus and related to AI. What worries me a little bit is, again, I think we'll catch up, but the fact that a lot of the large language models that are operational now are picking on languages and ideas that are playing out here and not in the region. And the region is where a lot of the population is going to come from. I mean, this juncture worries me a bit, and I think it's another issue that requires a bit more attention by policymakers in the region. But the thrust of the report and the issues it raises resonates significantly, and we do a lot of work at the IMF to try and make sure that this is at the top of the agenda with policymakers.
Thank you, Abe. And I just want to ask you one follow-up on the top of the agenda, because when you're talking to policymakers in the region, you're dealing with their day-to-day pressures, be it debt, be it currency, be it inflation, the things they have to get through month to month, year to year. And how do you talk to them about the transformational potential which is happening here and balancing the trade-offs of meeting their demands for their populations versus the investments, which we all agree are transformative, but we all understand are difficult to do and plan for?
So, I think, of course, the focus of a lot of our discussion is indeed in the core macro issues, the fundamentals. And we shouldn't underestimate how important those are to facilitating also further technological absorption, etc. So that we're contributing in that way, and a bit indirectly and not directly in these areas. Second, Josh, we shouldn't underestimate just how much human capital there is now, including in the public sector, including a lot of recognition at the highest political levels of the importance of this space. So, it doesn't even have to be the IMF teams raising these issues as important. They already have, whether it's ministries of technology, etc., that are actively working on these issues. So that's also been really very impressive. Was recently with Kristalina in my home country, in Ethiopia, and it was the Prime Minister that was putting on the table how important it is for Ethiopia to make progress on AI and raising it as an issue that he's grappling with. So it is something that I think is very much at the top of mind for many leaders.
That's great. It's encouraging to hear. Thank you, Abe. Nicole, let me turn to you. You started this work, as I said at the beginning, but a lot's changed around the world in the 18 months plus we've been working on this project, first with your issue brief and then with the full report, Ruth. And I wonder how you see the macroeconomic backdrop, what we see of development assistance changes from the United States, how that impacts some of these conversations and the potential, because it's not all positive. There's countervailing forces here. And I'd love to hear your perspective as someone who started this work to where it is now and how you see this landing both in Africa and Latin America, across emerging markets, given where we are today.
Well, thank you, Josh. Congratulations, Ruth. And thank you again to Tala for the partnership of the year. It's a pleasure to be back, and it's great to be with Abe and to be talking about these issues. And I mean, to your point, Josh, I'd start with the kind of why, it really strikes at why this work is so critical. And you're right, on the one hand, the landscape is changing, but on the other hand, we're still grappling with so many of the challenges. And I kind of related in some ways to the Sustainable Development Goals, right? We are in the final 5 years, and we are kind of woefully off track. To be frank, only roughly 35% of targets are on track to be met or have moderate progress. And financial inclusion and financial health, for that matter, more broadly, really strikes at the heart of so many of the SDGs, and I'll come back to that more macro picture, whether it's Goal 1 on poverty, Goal 5 on gender equality, certainly Goal 8 on decent work and economic growth, but it also affects, when you think about health, we know that there's really strong links between financial security and sort of mental health, right? We know that there's really strong links at thinking about sort of Goal 13 and climate change and the ability of people and companies to have financial services and invest in adaptation, in green technologies. So there is this the situational imperative for individuals, hasn't necessarily changed, and the opportunities and the challenges are really great. But I bring that up because I think, to your point, what has changed is what I would call the situational imperative for governments and the macro criticality, if you will, of these issues and the links. And you mentioned in following up with Abe, the debt challenges, right? And so when we think about where the fiscal challenges that so many countries and governments are facing in terms of tight fiscal space, which is not only because of debt issues and the fact that countries spend many countries are spending more on debt service than they are on investing in health and education and infrastructure and all the things that DPI that are needed for economic growth. But it's also, we're seeing obviously the declining official development assistance around the world, declining foreign direct investment. All of that is kind of creating an environment in which the financial inclusion and the financial access and the financial security becomes ever more critical. And things like remittances and the ability of using financial tools and financial services and digital technologies to decrease the costs of remittances, right, which we know have been so important for individuals as well as for governments. And just going to get back to the SDGs, it does relate to this point about sort of Goal 17, which is the whole idea of sort of the financing of development to begin with. So the situation has changed, and it really is critical.
And let me ask you one follow-up, Nicole. You have done, over the past 5 years working together, some of the best work on gender gaps across issues, across countries. And this report, I think, highlights some of those issues specifically and draws out an important difference between access and usage. And I wonder if you could speak to that just for a moment, because I'm not sure those who aren't well-versed in this completely understand. We talk a lot about the narrowing of the gender gap, but that's only one piece of the equation.
Absolutely. I mean, access is one thing, and usage is another. And it's also even the nature of that access, right? And what we do know is that there is a wide gender gap, not only of course, the gender gap in having that account has changed, but having the access and having the usage to the finance, to the things that kind of, again, go beyond just having the account. And I know, Shivani can speak to this further. And we know it really is critical when, women entrepreneurs, women in business, they tend to hire other women, right? They tend to invest in their families, in health and in education, and it does create much more of a virtuous cycle. But coming back to the more macro points that I was just talking about, I think one of the critical aspects of thinking about the gender dimension is, as I was saying, there's this fiscal crunch in so many countries, and in Africa and elsewhere. And one of the kind of aspects is one of the big challenges around the whole idea of domestic resource mobilization, right? In order to increase the tax base, in order to have more resources coming into governments from their countries to then further invest. And so there's a supply side question, right, to domestic resource mobilization in order to sort of expand that tax base. So who is often most left out of economic participation and that tax base? It's women and young people to some degree, and young women, right? And so when, again, it goes back to the micro and the macro and that criticality, because if women can have more access to financial services and more economic participation and receive more remittances and all of the things, then we can have more of that revenue coming into the system to then, come out on the macro side. So it really is critical, and it strikes at the heart, I think, of this conversation.
I knew that we would not have an event with the IMF president not talk about domestic resource mobilization, DRM. This is by definition, we have to, so thank you for raising it, Nicole. Shivani, I want to turn to you. You are living this every day from the private sector perspective. 13 million clients, Kenya, the Philippines, Mexico. Policymakers can talk about it. The private sector is putting this into action. What do you see on the ground in these countries? What's changed from your perspective over the past 2 years? And how do you balance the question I asked Abe about trust? The issue of increasing access, increasing inclusion, but also coming over some of these issues that prevent people from wanting to sign up for these systems, especially in an age of rapidly changing technology.
Yeah, you just said a lot there. I mean, I think what's exciting to me, we are now 10 years into our journey at Tala, and I think we're just, in some ways, I think the work is just getting more and more exciting. And I think that's because technology has really now met the vision that we have. And so I started Tala, I just want to go back 10 years ago for a second, because I think the problem still exists. The problem is still that, yes, financial access might be there. In that time, maybe it was only microfinance. Now we see this kind of innovation around fintech and what's possible. But we're still seeing that even though customers may have access, I would say usage is still a problem. We see that ourselves, and that's because we think about how do we continue to broaden the population we can serve. So I'll go into trust being a big critical factor of that, the DPI, working with governments as kind of the forces that are needed for us to accelerate this change. But when I think about this term of usage, I think of it as you need to have choice as a consumer, and you need to have awareness and control. And for us, that really goes into what we describe at Tala as financial agency. An agency can only be if you are not forced into a system, or if the products that are being delivered to you are not blanket products, but that you are seen as a true consumer that has potential like the rest of us. I think there's dignity in that. And so when I started 10 years ago, I started with that mission of how do we actually increase trust in our financial system? And in order to do that, we then built I would say now, the world's most fair and accessible financial services platform. And we've now expanded to 6 countries. So we're in Kenya, Mexico, the Philippines, India, Panama and Guatemala, and we have more countries coming because, again, it is not just about one country, it's a global problem that we're seeing, 3 billion people worldwide. But to your point, okay, what are we seeing in the last 2 years that's accelerating this change? I think one, it is new technology around AI. We've been leveraging machine learning and AI for the last 10 years, leveraging alternative data. That's daily life data, behavioral data that these consumers have that can really prove the potential of the segment and the population. So we've developed our own application to then deliver these services to them based on this proprietary credit scoring model. Beyond that, again, to get to true agency, it's starting with credit, so giving them the ability to grow their businesses, improve their livelihoods, but then it's actually thinking about how do we partner with other service providers or develop our own set of services, remittances, payments, so that, again, it doesn't just stop at credit and it doesn't just stop at access, but it's really saying, how do we help you protect your money? How do we help you actually use that money and then grow that money over time? I think the last thing I'll say that you really I think all of us are saying is trust is critical. So as we've developed our infrastructure, we've really focused on security as a big piece of this. We are holding our customers' identity as well as their data. And so we take that very seriously. We do not sell our data to any third parties, but the other aspect of it is really exposing, what are we using this data for to the consumer? And then ensuring that they have optionality. We're not dependent on any one data source. Because again, I think that would limit access as well as trust. And so really making it something that's holistic, that grows over time as our relationship with this consumer actually grows. And then I would say the other aspect of this is really investing in fraud mechanisms, ensuring that it's not only for our protection, that we know who this customer is, but that, again, consumers are not being scammed. And so we've done a lot of work around partnering with governments around consumer protection, as well as the fraud side. The last thing I think we'll get into this, hopefully, is how do we continue to do this with dignity? And so I think a big piece of this is, as we increase usage, how do we also ensure that there's no bad collections practices? That again, we are working on financial literacy. We're educating the consumer about what is right, what should you expect, and how do we ensure that there are no broken promises?
Thank you for that. And there's just one example in the paper about debt collectors, which I think is worth taking about it. You referenced it, but I think the paper gets granular in a good way, which this research doesn't always do. We talk about the opportunity, but you've experienced this, some of these risks and how you manage them.
Yes, and I would say what we have an initiative at Tala which we call Dignity in Debt Collection. And so we work with governments. In particular, we've been working with the Kenyan government and the Philippines government to ensure that we're putting forward a set of policies and guardrails for how debt collection practices should happen within these ecosystems. And we've leveraged a lot of the history around microfinance, where consumers have felt anxious or pressured, and then really thought about, again, how can we all be partnering to make this a better environment for the fintechs, for policymakers, as well as the consumer.
I encourage everyone to check out that example in the paper. I think it's worth reading. Okay, I have a second round of questions, which I will get through quickly. I already have about 15 questions online, and I haven't even said what I'm supposed to say, which is please use askac.org if you want to submit questions online. But obviously, people figured it out watching online, and we'll also turn to questions in the room. So we will get to those, but let me go through my second round briefly. And Ruth, I want to turn to you on the DPI point, the digital public infrastructure. We talked about the opportunities, and those are very important, but there's also risk, which I think you appropriately highlight in the paper about DPI. We hear this a lot from US companies as well, risk of fragmentation, risk of surveillance, risk of data privacy. Could you go through some of those briefly? They're in the paper, but I think it's worth bringing them out.
I'm going to be really brief because we could be here for a very long time. But the key is, of course, to understand it in each market, because it is the governments and the companies in each market. Tala working with her clients in her different markets, the IMF working with the government. So it's understanding what's happening in each market. So we've talked global, but it's really knowing what's happening, because we've got leaders like India and Brazil, but they are, and so what you're facing in those markets is very different than what's happening in Ethiopia or in the Philippines. And so understanding each market is like the most important thing. I think there's a visual, there's a map that shows some of the differences. Can you do the other one, the blue one? Figure 3, yeah. Just, this is on the rates of borrowing, but just shows some of the massive differences in terms of, because the regulatory situation and the DPI is very different. And so you've got amazing progress in Brazil. You see Brazil and China, and then there's much less in other economies. So understanding what's happening in each market is really important. And so I could go into granular detail, but I think that's an important reminder for all of us.
No, I just wanted to bring out the complexity of the issue, and I'm glad you were able to bring up the visuals, and thank you to the team. And everyone can find these figures 2 and 3 in the report, if I remember correctly. Abe, I want to turn to you on an issue which has animated Washington over the past year, and I know has impacts all over the world, stablecoins. Another trade-off type of issue, because there's certainly a financial inclusion element of stablecoins. We see demand in the region, but there's also a financial stability. There's a fraud issue there as well. How do you see that playing out in the region and impacting this conversation that we're having?
Again, this is one of those areas which is not being discussed as actively as I wish it is in the region because it may have quite profound effects in terms of how countries manage their external relations flows between countries. And I think 2 aspects in particular in terms of stablecoins that are going to impact the region. First, of course, is remittance flows and other flows between countries in the region and outside, what currency is going to be denominated and how it's going to take place. I think, we are behind the curve, I think, as a region, as the vast majority of countries, in terms of thinking and making sure that we we have policies and frameworks within countries that will facilitate a smooth transfer if stable coins become, the main means in which transactions are taking place cross-border. This is something that's going to be hugely impactful because the tapestry of capital controls in the region is quite varied and very complex. And wholesale adoption of stable coins globally can be something that undermines these capital controls, which countries have for domestic reasons and important reasons. So I think the interaction between increasing stablecoin adoption and domestic regulation is one of the key issues. The second one, though, is again, I don't want to undersell kind of the extent to which the region shows resilience and adaptability. And policy innovation. And, I think we already are seeing quite a bit of discussion internally. Southern African region is a good example, in SADC, about how to create the rails to facilitate more transfers domestically, including remittances, but also other flows that take place. It's a much more closely integrated region, including because South Africa is, of course, such a dominant and important economy in SADC. And so, at least at the central bank level, there is already, at central banks level, there is quite a bit of discussion in terms of digital payments, mechanisms, transfers, how to ease that, and make sure that the region is well poised. As always in the region, you see the challenge, but also evolving domestic answers coming through. As at the fund, what we try and do is, of course, try and keep the region informed about what's happening. Thought leadership also in terms of what the spillover implications of countries adopting stable coins on other members, but secondly also on those areas and those regions that are coming up with ideas, how to make sure that they're close to best practice, close to being consistent with domestic policy requirements.
No, thank you for that, and I appreciate the nuance there because it's often presented here sometimes as an all or nothing. Stable coins are coming and everyone's going to get on board. It's more complicated than that, and it's country by country, regulatory framework, capital flow issues, as you said, restrictions. But on the other hand, there's consumer demand for it, so there has to be some adaptation going on. Nicole, I want to turn to you on the multilateral side. Your hat now, UN University, but also the US G20 year going forward. What are the right avenues from the multilateral institutions, of course the IMF, but otherwise, that can push some of this forward over the next 12 months?
It's a great question. Thanks for asking. And actually, the stablecoin is a great kind of pickup entry point, I think, into that answer. Because yes, we have obviously the multilateral, the development bank system, and let's remember it's the IMF and the World Bank, and it's also the regional development banks, which are doing some really interesting work. If you look at the EBRD, for example, working primarily through and with the private sector, so thinking a lot about how they can sort of utilize these tools. But bringing it back to the UN, where I currently sit and work, and I'll kind of relate back to one of my sort of previous answer. One of, I think, the challenges in the multilateral space is particularly when we think about the financial sector is there can be a disconnect, and we've talked about this before, between, quote, Washington and New York, and the different policymakers who may be the financial policymakers versus what we might think of as the foreign affairs policymakers, right? And so, at the UN, for example, we have the financing for development agenda. Last year, we were in Sevilla for the fourth annual conference on financing for development. And part of that was the Sevilla commitment. And I come back to stablecoins because I do think that ongoing process, the financing for development agenda, the Sevilla commitment, and its follow-up and implementation, does create a real space for conversation and policy dialogue at the multilateral level, but as an entry point into what happens at member states, which is really, to Ruth's point, that it's country by country, to where this is happening, what are some of the policy agendas, how can that framework and those commitments that have been made and signed on by almost all countries of the world, be sort of taken forward. And this is where there is a lot of talk in that document and in that process around the importance of technology, not only artificial intelligence, but also stable coins and blockchain. And I would say we need to unpack more of the interoperability between the different technologies. But it's also thinking about how we go, again, from the multilateral to the national. So things like integrated national financial frameworks, which are a kind of critical piece of the broader financing agenda. How do these policies kind of filter from the multilateral into the national? Because that is where it sort of goes both ways, right? From the national to the multilateral, from the multilateral into the national. So how can we sort of inform that? And the other piece I would say on the multilateral front is, and it comes back to the data. As much as I think with this report and with the data we have, we are understanding better and unpacking the challenges and the barriers, I think we still need to unpack more and better understand the incentives. We need to better, to understand not only what governments need from a kind of data to sort of demonstrate the possibilities in the case, but also from a user perspective. Tala has done, great research, as Shivani was talking about, with understanding their customers. But there's other providers, and we may have obviously the World Bank and the Findex, and they're great starting to do their kind of surveys. But there's so much I think more we need to know. The more sophisticated these products get, and the opportunity gets to really kind of understand what the challenges are. And again, that's where multilaterals can play a really important role in galvanizing data, in collecting data, in sort of understanding, as well as I said, kind of convening around and bringing these issues to the fore.
And we could not have done this work without the Findex. So credit to the World Bank. You'll see it cited throughout this report, but it's simply the whole report hinged on when we got that data over the summer. And so we're grateful for that and grateful for the work that so many of our colleagues do, both at the fund and the bank.
Yeah, and it's the governance piece, right? It's understanding the governance and, again, where those incentives come from. But yeah, Findex has been really critical in these over the years.
So Shivani, final question to you before I turn it open to audience questions. So everyone get ready here in the audience, and then I'll pull up some of the online questions. But this public-private sector dynamic, Nicole talked about the public sector side, what needs to happen from the multilaterals. The US G20 presidency, one of the items is deregulation to unleash global growth. But that's a bullet point, that's a talking point. What does that mean in practice through a G20 process? What does the private sector see? What do you see that would actually be helpful on the ground to continue to grow and execute on the vision you outlined?
I think we've touched on it a lot. I would say that, when I hear the word deregulation, I'm not sure that that's exactly what we need. I think what we need is actually co-regulation and, I think co-creating policies where institutions like ourselves will say what is needed. I think a big piece of this is DPI, right? And ensuring that the cost to launch these kinds of services, open up new markets, comes down so that innovators can actually, again, create more, I would say, cost-effective, flexible products. Because at the end of the day, that is the barrier. It is hard to serve the segment. We know that there's potential, but because there's a lack of infrastructure, it does require us to, do things that may be loss-leading at first, knowing that there's a long-term relationship, but not everyone is going to sign up for that, right? Go ahead.
Just build on that,
please.
Because I totally agree, because it's not a lack of regulation, it's appropriate regulation, so that you can create a dynamic environment so that the fintechs and other financial service providers can do their great work of designing appropriate products for the many, many whether it's 3 billion more or less, who are actually in need of these financial services for their macrocritical so they can grow.
Right.
And so whether you're a policymaker or a fintech, you need appropriate regulation to be able to give the opportunity for the private sector, but also give the trust to the individuals. So I think, and co-regulation is a great term, figuring out how to make it work, but it has to listen also to civil society so that women's voices are there, as Nicole had talked about, gender equality. So
No, I appreciate that.
And again,
Important
it's the
point.
co-regulation that's going to create the incentives for not only the private sector to invest, but the public sector as well.
And I think, while it will also bring us to the table in terms of innovation and the ability to launch, it also protects us, right? And I think that that's the critical piece here, is that this protects the consumer, it builds trust with them, but it also builds trust for the fintechs and the private sector to want to stay in the market. And I think if we have bad actors that come in, even if they're providing access, right, it is actually harming the consumer, which actually taints the industry for the rest of us.
Yeah.
Because then we're all hit with fraud.
Yeah.
So I think that's a big piece of it. I would say the other piece that we've also all touched on is enforcement.
Absolutely.
So I think this has been something that we've been, I would say, pushing hard in the markets that we work in to really get the regulators as well as governments to help us with that enforcement. And we've seen some progress there, especially in the digital space, because it's easier to be able to prove and stop fraud. But the more that we, again, go down the road in terms of stablecoins, blockchain, AI, it becomes easier and easier. And again, that hurts both the consumer and the private sector.
Just to pick up on that, I mean, one of the other, the better enforcement and the better countering the fraud that we're able to do from a kind of consumer and financial inclusion perspective, it also can help with one of the other aspects, getting back to domestic resource mobilization, which is countering illicit finance. And I do think that financial inclusion and countering illicit finance and technology actually all kind of go hand in hand, and so it's worth kind of bringing that back into the picture.
Abe.
Yeah, no, just I don't want to be too controversial, but I think
Please.
I think we underestimate the limitations and how constrained state capacity is in many developing countries. I think it's true for many African countries, but also true for other developing countries in general. And so when we talk about appropriate regulation and DRM and this, I think if countries could do that, they would already be developed countries. It's exactly their inability to address all of the challenges that they have. I mean, development is a really multifaceted challenge, and I think this goes back a little bit to some of the points you were raising. At any one time, there's probably social conflict or protests that governments are dealing with as priority issues. So I just don't want it to make it to seem kind of, these things that we take for granted in many advanced countries are easily doable. And maybe a better way of thinking about how we facilitate growth, whether it's sectoral or others, is try and look at what are being caused as a result of active policy distortions that are actually being constrained. So in some countries you have restrictions on new lenders or caps on interest that's going to be charged. So how can we remove those policy-induced constraints? And I think I don't know, I tend to see in those countries where those, there's attempt to address those, there's much more of a positive environment for private sector development rather than waiting for optimal regulatory environment. Anyway, it's not that I have an answer, but just to not minimize how challenging it is for governments to create these environments, the enforcement, etc. But anyway, small point.
No, I think it's important to
Conflict and fragility, arguably.
In many cases, yeah.
Yeah.
Okay, I'm going to go to online questions. I have not used this system before, so we're going to see if this goes. Yes, that worked. It shows up behind us and in front of you for the panelists, so you can see. So I'll read the question, and then whomever wants to jump in. Is there a risk that rapid expansion of access to consumer credit in emerging markets, if not matched by adequate regulation and financial literacy, could lead to excessive household indebtedness, similar to concerns currently observed in India? Anyone want to jump in on it? We all looked at you, Siobhan.
Yeah. I think it's a great question, but I think this goes back to what is the purpose of I would say the mission and the purpose of the organizations providing credit. I think this is where I think actually adequate regulation will help all of us. And putting in those strong guardrails, I think you've mentioned it as interest rate caps, but again, working with institutions to understand what is the risk that they're taking in terms of delivering that access and the usage, and does that make it possible for the institution to also be sustainable? I think it has to go hand in hand, because otherwise we are actually not going to be able to meet the need and the opportunity. I think the other piece, organizations like us and many others already do a lot of really great work around financial literacy. We've embedded it into our experience directly. I don't think that goes into just educating the consumer, but it's about transparency. And so ensuring that you're not saying one thing in terms of what your prices are and then charging fees on the back end, or not giving customers the full value of your product to begin with. We see many fintechs and others in the market that will actually abstract money from the top end, right? And so again, when we think about access and risk, we have to really think about it as, okay, what is sustainable and how do we ensure that the customer actually understands what they're getting and how to use that to then improve their livelihood. So I think it's a very important question. And again, we can use technology to scale this very quickly, but we have to be very careful as we do that to ensure that we're not creating a separate problem.
Thank you. Any questions in the room? Any hands raised? And we'll run a mic over, please. Yes, and introduce yourself.
My name is Rebecca. I work for the Inclusive Financial Systems team at the Gates Foundation. We've touched on the topic of stablecoins, but another topic that's getting a lot of interest in the development community is open finance and open data. I'm curious what your view is on whether the kind of hype around this topic is legitimate in terms of whether it could expand access and usage for the financial sector, and in terms of your experience, how you are interacting with this topic as it's starting to be rolled out across kind of LMICs.
Thank you. Anyone want to take it? Shivani, you want to start? Or Abe, let me go to you and then...
Why don't you start?
I don't think I am the right person to try and answer this. I just want to make one point, which is, a small distinction, a little bit, as we were discussing earlier, between usage and access. I think I would want to make a small distinction between what technology can do for you, or like new innovation in terms of more efficient use of existing savings within a country versus aggregate savings. Aggregate savings are going to be impacted by really profound and fundamental factors like demographics, what share of the population is working age, and broader macro policies. But what I think technology does for us, what all the innovation that's been taking place has done for us, is making sure that those resources are much more efficiently used and are promoting inclusion significantly. Yeah? So open data will help with more the efficiency of how existing savings are allocated, but they will not increase overall savings. That, I think, other more profound factors are at work.
Yeah. Shivani, anything you want to add?
Yeah, I'm a huge proponent of, I would say, open data, open banking, because again, I think it puts us all on the same playing field. And I think what it does is then appropriately get us to compete in terms of the private sector for the best quality products. Right? Ultimately, this is not about creating, transactional relationships with this consumer. The way to win is to actually maintain that relationship over time and to increase your value. And so the more that we can be, I think, not fighting fraud, but actually fighting on value and services provided, I think that puts us all in a better position. And I think it's the right way to go if you're in this for the right reasons, which we can all discuss. But again, I think it goes back to the report to me, which is there's 3 billion people around the world that are lacking access to these products, or I should say not using these products. And so it's a huge economic opportunity for us all. And so for me, I think this is where blockchain comes in to say, can we actually transparently report, right? And show the potential. I think that brings more private sector actors to the table and enables all of us to, again, compete for the right reasons.
Okay, I'm going to try to get to 2 more online questions.
Can I just say one
Please,
thing?
Ruth.
It's also
Yes.
really important for women because their data has often not been part of the existing financial system, and so it's really important for women generally, but women entrepreneurs to be able to have the access they need.
And just very quickly on top of all of that, I think just 2 things when we think about data is one is making sure that we're just building in that kind of trust and privacy into the open data conversation, but also disaggregation to Ruth's point. And I think many have heard me use that word repeatedly, but again, I think data can be valuable if it's credible, if it's quality, if it's trusted, and if it's disaggregated for better use to making sure that it's not widening disparities, but being used to help.
Well, that perfectly led into the question I wanted to pull from online. Thank you, Nicole. From our colleague Alicia from the center. And it's really about this data issue, which has been a big conversation we've had through the research process. So I'll read the question. Data plays a critical role in advancing financial inclusion, especially when designing and implementing solutions. How should the metrics for measuring financial inclusion evolve? As digital financial services continue to expand globally, what role should the G20 play? And I would say also what role other IFEs can play in that process. And we thought about this a lot. Are we even measuring the right thing in the conversation? So Ruth and Nicole, maybe I'll turn to you first, and Abe, I'd like to bring you in on that question as well.
There is, it was actually the G20 back in 2016 that did the global financial inclusion indicators, and they've used the Findex, but they've also used the IMF-FAS, and I think that there's going to be new impetus behind that as well, and that a range of different sources is really important, not just the World Bank and the IMF, but also national data sources as well as financial sector. And so having a conversation, I know that there are a range of different places having conversations about the data that is useful for the future. And so thanks for the question, Alicia, because it's the G20 does have a role, absolutely, because it's the 20 biggest economies and what they say matters. So,
Nicole, Abe, anything to add?
Yeah, I mean, I think it's a great question, of course, Alicia, thank you. And I think it's 2 things. I think it's understanding that both the inputs and the outputs and the outcomes. And I think that's where maybe there needs to be some more evolution. And we're starting to have, again, a better understanding of the savings, of credit access. Let's not forget insurance. I mean, going back to the first question about the risks on household credit, I think that's where access to insurance services can help balance people's need to take on credit. So just to kind of add on to that one before. So it's the inputs, but it's also better measuring the outputs and the uses of financial services. So going back to my earlier comments about how important are financial and measuring financial inclusion as it relates to health, as it relates to climate change and other kinds of investments that both people and governments are making to increase their well-being, both financially and economically, but beyond. I think it sort of echoes this a broader conversation that's happening at the UN and elsewhere, what we call sort of the beyond GDP conversation of how we are sort of just measuring people's well-being and national well-being beyond GDP alone, beyond income alone. And I think the financial inclusion kind of strikes at the heart of how we measure that going in and coming out.
Can I add
Please.
something there? I really love what you just said, which is how do we go beyond just the, I think, financial metrics of this? And actually, it might sound counterintuitive, but something that we measure is financial confidence. And we measure somebody's own qualitative assessment of themselves on decision making and their ability to lead their households. And so we are tracking, and now we've done this for the last 6 years, tracked, is that improving over time as we serve this consumer? And again, going back to women, if we know that women are the decision makers in their household, or we want them to be in some form, are they feeling like they're more in control of that role? And I think that's the stuff where we can broaden what we mean by financial inclusion.
Thank you. I'm going to get to one more online question before we close. It's a geopolitical question. Have to do that here at the Atlantic Council. And it's about China. I think it's an important question because we're just talking about this as a sort of fintechs come in and they expand opportunity, but we live in an era of renewed geopolitical fragmentation. And there are all different kinds of fintechs, American fintechs and European fintechs and Chinese fintechs, certainly across emerging markets. So the question here from Jesse, how do you view the increasing presence of Chinese fintechs in emerging markets and developing economies? What are the risks versus opportunities? I know not an easy question, but I think reflects some of the realities on the ground of these developments. Anyone want to jump into that one?
I'll have a stab at it. I mean, which is that, or provide a perspective I hear on the ground, which is that, people see America as an incredibly important partner, of course, American technology as important, but also China as a really important financial partner, an example for how development progress can be affected. So, I think this binary choice people don't see on the ground. People will work with partners in terms of whoever will facilitate their development, their access to finance and technology. Yeah? So I think this sense of one camp or another, we still don't see emerging on the ground yet.
Thank you, Abe. I think that's an important point, and we'll close there because ultimately it's about achieving the goals, and people are trying to improve their lives and livelihoods, finding all new ways and measures and means around the world to do it, and we will continue to do this work here at the Atlantic Council. We're grateful to partner with everyone here. Grateful, Ruth, for your leadership on this report. I want to thank Ruth, Abe, Nicole, Shivani. I want to thank you all for being with us today. Thank you all for joining us online. You can continue to follow the work of the Atlantic Council Geoeconomic Center at atlanticcouncil.org. We wish everyone a pleasant rest of the day.